Good morning for everyone. Good morning for everyone that's in London, and good evening for those of you that are in the Southern Hemisphere. My name's Andrew Stabak, as you well know, and welcome to the 7th day of the Newfound Virtual Market Mission. We're in for another excellent, but also very information and technically filled session today. I think you'll agree we had a fantastic lineup of speakers to give you advice on how to get yourself set up to enter the Australian marketplace. Well, today or tonight, you're going to hear from literally some of the best people in Australia about the regulatory and data environment specifically, because Australia is entering the open banking environment behind the UK, but there's a lot of lessons to take and understand from what's going on in that's gone on in the UK market and how Australia is different. And tonight, as I say, we've got some really strong speakers, three to start off with. And we're going to open the session with a panel discussion, which I'll be chairing. And the first speaker I want to introduce you to is Harry Godber. He's the advisor for FinTech and financial regulation at the Australian government. He actually advises Senator Jane Hume, who opened the conference. And he's advising the Morrison government on financial regulation. He's also served as a product and strategy executive at Data 61, Australia's largest data innovation group. Previously as industry, innovation and science advisor to the Turnbull government, Harry oversaw the establishment of the Australian Space Agency and the implementation of the National Innovation and Science Agenda. Welcome, Harry. Good to see you here. Next, there's Harry there. Next is Michael Blythe, Head of Government, Regulatory and Industry Affairs at the Australian Retail Credit Association, otherwise known as ARCA. And he's previously worked with ASIC, the Australian Securities and Investment Commission, where he was responsible for leading the team that produced ASIC's review on mortgage broker remuneration. Has more than 20 years experience in financial services, starting his career as Consumer Credit Legal Service Victoria, and also senior legal and compliance roles with NAB, GE, Money and ME Bank. Michael, lovely to see you. I've worked with Michael for many years, and I know he's got lots of really good talking points to get across. And then finally, Scott Farrell is the senior partner at King & Wood Mallisons, more than 20 years experience in financial markets and financial systems law, advising market participants, exchanges, clearing and payment systems, regulators, and also governments in Australia and Asia. He's advising and writing a paper for government as we speak. Scott, lovely to see you here as well, and welcome to the Newfound Market Mission, all of you. So, G'day Scott, as I said, we're going to be talking about what technology and data risks should you be aware of in Australia. And as I say, there's been a lot going on. Australia's data environment, I would say, has come a long way. I think it'd be fair to say in the last sort of 5 years, because it would be fair to say we were well behind. I would say 5 years ago, we've had a negative credit reporting environment, and I would say a negative data environment in the past. But we've embraced open banking to a certain degree, but also we're learning a lot from what's been going on in the UK environment. Still some way to go, and still a lot of education to go, but open banking is now here in Australia. So Harry, what I thought I might do is start with you, because you're really working on the government policy and understand it from the government's perspective, and can give us an overarching theme as to how you position that, particularly for our UK, but also our New Zealand participants. And then I thought I might go to Michael to give us a lot more technical insights as to how that's going to work from a practical perspective. And then Scott, some of the legal perspectives and where you come from as well. But Harry, can I just sort of ask you, how would you position where the Australian data environment is compared to, say, the UK market? And what are the key themes that should be understood?
Absolutely. Thanks, Andrew. I think the Australian data market is quite unique in its focus on the consumer. And it's distinct from the UK and the EU and the GDPR framework, in the sense that while the GDPR looks at the consumer from a protective standpoint, perhaps, and prioritizes things like consumer privacy and the right to be forgotten, etc., the Australian data perspective is more about empowering the consumer to use their own data for their own benefit. And you can see that through the way that we've implemented the consumer data right, which is an equivalent in one sense to the UK's open banking regime, in that it does allow, in its first stage, consumers to use their banking data to send it in a secure, private form to other competitor financial institutions or to comparison apps as a first instance use case, and figure out how they can get a better deal. But it's much wider than that as well. It will extend economy-wide. It will go across all industry verticals that have a particularly sticky consumer environment, or where consumers experience significant information asymmetry that wouldn't allow them to look at the market and figure out exactly what position they'd be in were they to switch. And it remedies the idea that institutions have more data about you than you do. So that's the theme of empowerment that this government has taken towards data. And I think in a broader sense, we also want to encourage the growth of businesses that use data in innovative ways. And those may be businesses within Australia who have started up under the early stage venture capital or venture capital limited partnership regimes that were set up by this government a couple of years ago. Or they may well be companies that are established and are looking to branch out using their existing data flows and databases in interesting ways. Or, in the case that is most relevant to those on this call, to welcome those service providers from overseas to use their data in more flexible and interesting and innovative ways here than they might otherwise be able to in other markets that aren't perhaps, as the EU might suggest, as progressive, one might say, in the way that we look at data as a commercial commodity. So our message to you would be, this is an early stage project in terms of government looking at data as a unique resource. And our doors are always open to you as the pioneers of data use coming into Australia, in terms of any blockers that you may experience in your way through, and indeed any suggestions that you might have for the expansion and tweaking of the framework. And I know that Scott will be able to talk in much more detail later on about the work that he's doing on that task in particular.
Excellent, Harry. Michael, let's talk about how the environment that we're going to see here in Australia is different from other open data regimes, and also specifically the UK, because I think that's probably the easiest reference point, but there are many differences to how we treat data, and also some of the personality traits that we have here in Australia, because we're a little bit unique, like we have platypuses and echidnas. We treat things differently here, and we grow different things here in Australia, don't we?
Yes. The way I've sort of described it and written it down is, what I would suggest is being aware that the Australian community has always had a complex and complicated relationship with data and privacy. I won't pretend to be old enough to remember, but it extends back to sort of the late 80s, as far as I'm aware, with the very restricted approach to credit reporting that Australia has had. So we had legislation in place in the late 80s, which severely limited Australia's credit reporting to negative only. And that was from a backlash through the media and through the community pushing for it. That has, from my experience, that has extended right through to the present day. So Australia has only recently received greater access through the credit reporting system to comprehensive information. And even when that was provided, it was done in a very limited, cautious way. So Australia still has a lot less information available to it through the credit reporting system. It doesn't have things like balances for those on the meeting who are aware of the credit reporting system in the UK. It doesn't have balance. It doesn't have repayment amounts. So it was a real fight to even get access to that limited information. And even access to that information was limited to a very narrow group of organisations. So telcos, utilities don't have access to the information.
Still not now?
And no, still not now. And it's even a fight to get access to information that everyone generally thinks is necessary. So We're having a big conversation at the moment in Australia about hardship flags on credit reports. So there is a very strong view from consumer advocates, which gets picked up by various stakeholders, that someone who's in hardship and who's not making their payment shouldn't have any record of that on their credit report. So their credit report should show that even though they're not making payments, their credit report should show that they're making payments without any flag. I will say though, the current government is looking to change that, but even that process is experiencing a lot of tension. And it's just, I think shows that there's the conservatism of Australians when it comes to data, despite sharing whatever personal information they have through social media, that there's still a conservatism when it comes to particularly financial data. But also that, that's through the society, but it's also our consumer advocacy area. Advocates in Australia are quite strong and quite loud. So it's just a caution to say that we do have a particular view on data. The work that's been done in open banking is amazing, and it will change the Australian economy. But for every 2 steps forward, there's, it's sometimes there's a bit of a challenge to get it to that step. I won't say 1 step back, it's probably not that far, but even with the open banking regime, we've seen sort of, pushback on some of the elements of the data sharing. So just small limitations being placed on what users can do with the data, that just evidences the Australian conservatism. I mean, there was some changes that were implemented in the rules that would prohibit a consumer's data being sold other than a de-identified manner. There's strengthening of the requirement to destroy data rather than simply de-identified. And these are things that have come through from consumers pushing back on the system. And it's just something to be aware of as you're dealing with the Australian data regime.
Harry, sorry, keep going, Michael.
No, I'll stop there. I probably took enough time.
No, we've got plenty more time, so don't worry about that. Harry, what's the balance how would you describe the balance you're trying to achieve here between the rights of the consumer, which everybody is very conscious of and very aware of for very good reason, but also there is the ability of financial institutions particularly, but other organisations as well, and Michael mentions utilities, to be able to manage the risk involved in running their business and supplying credit, supplying services on a credit basis. And now we've got this COVID-19 downturn, which is going to change pretty much the whole environment. We've already seen that with the way financial institutions, I think, have been fantastic in allowing their customers a lot of flexibility. How would you describe the balance you're trying to achieve with the regulation and legislation that you're putting through in this area?
Yeah, it is a tricky one. On credit reporting, I think what we have seen is a strong willingness among the financial institutions to implement positive reporting and to implement the consumer credit, like the comprehensive credit reporting regime, even before it's passed the Parliament. So I think it's fair to say that at least as far as the big institutions and the major lenders are concerned, we do have a comprehensive credit reporting regime already in place de facto, if not de jure. And it's certainly this government's intention to get all that legislation passed as soon as possible. Now, the other thing that is important to think about is the fact that we've just been through a Royal Commission process into the financial system that has highlighted in many quarters some disappointing behaviour among, in some cases, credit providers, in some cases, financial advice and providers and planners, and in other cases, the big financial institutions where there were some quite damning findings and a number of heads have rolled as a result, and the government's in the process of implementing quite a significant suite of reforms that will assist with restoring trust in the financial system on the part of consumers and indeed small businesses who in many cases act like consumers. I think that has perhaps swung the dial in some sense. And what I mean by that is back when I started working for Malcolm Turnbull in 2015, and we did a thing called the National Innovation and Science Agenda, our priority as a government was to try and encourage innovative use of data and the growth of innovative firms. In other words, we had more of a risk-taking mindset than perhaps we have now. That the Royal Commission has come through, has identified some significant issues, and we're now taking work to repair those. The dial has in some quarters swung back to compliance and away from risk-taking. And I think that's certainly evident, as Michael mentioned, in the consumer advocates who tend to be sort of aligned with the other side of politics in Australia, through no particular ideological reason other than I think that they tend to have associations with the trade unions. But there's always that tension, of course, where you might have a consumer advocate, as some did with regard to comprehensive credit reporting, coming and saying, hey, everyone's got a right to data, and if you don't, if people have been experiencing hardship and you flag that on their credit reporting, well, that means they're not going to have the opportunity to get access to credit in the future. And as soon as, banks start going and providing loans to people who probably aren't creditworthy, I'm sure you'll have those same advocates come back and say, oh, but it was all the bank's fault. So there is a tension, and I think there's a tension even within the consumer advocacy space that perhaps hasn't been worked out at an academic level, let alone a policy level within those bodies. As a government, though, we're very much focused on ensuring there's as much data available as possible and that people are able to take control of what they've got and use it to the best of their own ability to get products and services that are more tailored and more suitable for them.
I see. Scott, I'm going to bring you in here and just invite you to give us a brief overview of, it's hard to ask this question because it's so general. How would you describe, or what do you describe are the key issues that fintech should need to understand when coming to Australia, particularly from the UK or even New Zealand, that is a key difference to what they're probably used to in the UK? Because many of them will have a pretty good understanding of data and how it's used in their own environment, because that's often the business they're in. But when you're coming to a new environment, and particularly one that's been changing so rapidly, that's a real challenge, isn't it?
It is, but there is a closer connection now more than ever. And the reason I say that is, as you indicated, I am leading an inquiry for the Australian Treasurer at the moment into the future directions of our consumer data right, which leads on from the one I did 3 years ago, which led to the creation of this right. And one of the terms of reference, which I'm positive Harry had a hand in because he gets to hold a pen in these sorts of things, included connections with international regimes. So, for example, I was talking to Imran, the head of the OBIE, last week, and I was on the phone to Canada this morning, and I've been speaking with New Zealand over the last couple of weeks. The important thing in understanding how these are different is to look at the background, or to look at the why. And in a number of these countries, and indeed it seems to be the case in New Zealand based on the recent consultation report which was produced by the New Zealand government, that exactly as Harry said, the why is different. It's not PSD2 here. And indeed, we're not coming from the P's in PSD2. And one of the important things is, as both New Zealand and Australia, and forgive me for the New Zealand people on the line, I know a bit about the New Zealand regime. I'll just draw connections with it, but I'm not pretending to be one of those annoying Australians who think they know everything about New Zealand, right? So forget that. But the connection is what we're trying to do here is we're trying to build a financial system for data, but not data for a financial system. Whereas particularly the European regime, because it's PSD2, it's all the data, the AISPs are hanging off the side of PSD2. Whereas this is supposed to be a safe, secure system where what we're transporting through the economy is something that increases productivity just in the same way as money does. And so what do you see as different as a result is, well, for a start, in Australia, the regime, and most fintechs will plug into this regime in one way or another going forward. The consumer data right, the lifeblood for much fintechs, is whole of economy, exactly as Harry mentioned. So if you're British, look at the smart data paper, which was released last Tuesday night, I think it was, in the United Kingdom. And then just imagine what that would be like if the law was already passed. It was one single law, and you had one government department that covered the lot, which is the Australian Treasury, rather than that paper, which for very good reason says that they're trying to connect up the energy minister and all these other things. So the Australian Treasury includes Senator Hume, of course, and so you have all the decisions being made in one place. Also, what you will see in Australia is liability that you have for engaging in this regime is much clearer. And the reason for that, quite frankly, is when I did the first review, both the OBIE and the CMA in the UK, who are very generous with their time, pointed out that maybe this was a useful thing that we could improve on. And certainly we were very happy to do that. And that's why we're talking to other countries as well, because they will find improvements that we can adapt as well. One thing you won't find is hugely different, but it will be slightly different, is what you have built at home in order to fit in with the standards that you have for these sorts of regimes will for the most part be the same here, but there will be some changes. Now, I am told, I'm not a technical person, that's why I recommended we create this data standards body, which has a lot of clever technical people, that is because the standards being adopted are the ones which everyone's going to progress to, as opposed to exactly the ones being used now. But the idea was, exactly as Harry mentioned, is we don't have a limitation that you have to be Australian. So for example, unlike the Japanese regime, where you actually do need to be a Japanese fintech to be part of it, Australia is far more open. And to make that work, in fact, to help people like whoever you are watching this, is we're using international standards to do that. So although there are differences in the Australian why, and some differences is where we want to get to, the actual building blocks for a small business or a larger business coming to this country is we're trying to make that easier. You still have to get accredited here, just like you do in the UK, and we don't yet have a connection between that, although that is kind of in my terms of reference for my current inquiry as well.
Harry, that must be encouraging that we've got a positive relationship with the UK building right now, and also a bridge, and now a Minister for FinTech, all sitting nicely and conveniently in your wheelbarrow there. What do you think is going to be how this shapes up, particularly for our UK participants that are coming down here? What are you hoping for by way of execution?
Absolutely. Well, we've got a fintech bridge, as you say, with the UK currently. It's quite broad in its terms of reference, but in general, it suggests that our regulators would work together on things like standards alignment and even mutual recognition. Now, those are principles, I suppose, rather than things that are written into law. But what we are doing at the moment is negotiating a free trade agreement with the UK, which, as one of our very biggest trading partners, will have a significant impact on trade and financial services. And keep in mind, Australian financial services accounts for something like 1/10 of our GDP. It employs about 4% of our workforce. And our trade with the UK in financial services is critical. So as part of our priorities for negotiating this FTA, there will be a focus on the financial services and in particular the fintech ecosystems. And you may have heard, if you've been listening to people like Secretary of State Truss on the UK side talk about this, there's an enormous willingness to define our fintech relationship in a regulatory sense, whether through the FTA or through a furthering of the fintech bridge. And we'll have some more to say about this in the upcoming budget, which you will find in a month's time will be handed down, and we'll have some interesting provisions around this sort of thing. The other thing I would point out is not only do we have a very strong fintech relationship with the UK, but we have a very strong relationship with our own region in the Asia Pacific as well, and particularly Singapore, which is arguably the Asian centre of fintech and financial services. And while we don't have yet a formal financial technology bridge with Singapore, what we do have is a digital economy agreement, which was recently signed, and it's kind of an FTA light in that it identifies key sectors, including fintech, as things that we want to collaborate with Singapore on. I mean, when air travel was a thing, I was in Singapore with my minister, nearly a year ago now, but we met with MAS, which is their equivalent of, well, they're super regulated, they're equivalent of the Reserve Bank and APRA and ASIC, and we met with the IMDA, which is their key data agency, and with our ministerial counterparts. And there was an extraordinary willingness to not only do business with Australian companies, but to work out regulatory arrangements with Australian governments and regulators to ensure that the trip over would be as easy as possible. So that means that we've kind of positioned ourselves not only as a bridge to the UK for Australian companies and vice versa, but potentially as a bridge to Singapore and the region in the coming couple of years, which is extraordinarily attractive when you consider the business opportunity that's available in the Asia Pacific, but it's also incredibly attractive when you consider Asia Pacific fintech firms wanting to enter the Western market, because we have very similar demographics compared to America and North America and Western Europe, and that's not just in terms of wealth, but it's also in terms of things like financial and digital literacy. We have a quite similar regulatory regime in some respects. Our prudential regulation authority, APRA, is probably considered one of the world's toughest, if not the world's toughest, and has developed a reputation from pulling us through the financial crisis without having any banks go under. So if you are regulated in Australia, it is not only a signal to both the West and the Asia Pacific that you're able to do business there, but it also is a great opportunity to collaborate and interact with those firms that will use Australia as a doorway into both markets.
Points. Michael, as the head of the regulatory affairs and so on at the Australian Retail Credit Association, you are very close to the coalface. You couldn't literally get any closer without getting burnt. And you're the one that deals with the real practicalities of our data regime and data standards. And I mention the word standards because although there are some standards, there's not a lot of standardization here in Australia as well. Can you just explain some of the practicalities of working in a data regime currently, and more importantly, or possibly just as importantly, what we've got to look forward to over the next 12 months to 18 months?
Sure. So we, separate to the open banking regime, ARCA manages the data standards for the credit reporting system. So that's something we've been working on for, I think it's at least 6 years now.
At least.
And and it is still a work in progress. Although we have, I think we have a very settled, good data standard at the moment. I mean, the complexities of getting the credit providers in Australia to comply with the data standards and to agree on the data standards is always a challenge. So it has been very difficult. I mean, I won't pretend to be a data that side of the data expert, but I do know this is the challenges of trying to design the APIs. It can't be underestimated. I know that there's a lot of concern and challenges being experienced in trying to do these APIs in relation to the product comparison. I can't remember the product comparison APIs where it's just the standard product. Very difficult to actually have a standardized description of products across Australia. And in terms of the account data and the transaction data, I mean, I've had some personal experience in a previous role at the regulator that the difficulties with some of the larger lenders' existing systems and legacy systems in actually being able to extract the data in a way that it can be sent in a standardized format. I mean, I had experience with asking our lenders to provide data on the home loans that they've issued over a year. All credit providers in Australia, all banks in Australia had real problems, even to things like asking which home loan is offered by which broker. Not a single Australian ADI could actually provide that data. So the data being held by the banks themselves will be a challenge to have it in a standardized format.
Yeah. Well, I know from personal experience, I've worked with LIXI, which is the Lending Industry XML initiative. It took them 15 years to get a standardisation, which actually then effectively worked across the big four banks and then many of the other lenders. And still, LIXI today, 20 years on, has made fantastic progress. But still, you couldn't say, look, you know, it's still an easy process. Although LIXI 2 is a massive leap forward. So standardising data is a real challenge. And I know that there's a lot of work to be done in that space, possibly some great opportunities for some of our fintechs as well. But the other thing is the education process and education around data. And Harry, I've asked you this question in practice once before, but whose role is it going to be to educate the Australian consumer about the effective use of data going forward? Because that is just such a massive task. I see opportunity, but I also see an enormous amount of resources being required.
Yeah, absolutely. And it is, as Michael has alluded to, a bit of a cultural change that will be required because Australians as a community have had a more conservative approach to use of consumer data, certainly compared to those in our region, and perhaps compared to those in the UK and the EU, although perhaps not to such a great extent, in my opinion. But you know, to illustrate that idea, when we met with the CEO of DBS, Piyush Gupta, and he was talking about how they were moving to QR code payments, and he said, you know, pretty much the only thing that you need to do to incentivize someone to hand over banking data through their phone is just to give them an incentive to do it, make it cheaper, make it more convenient, and they'll do it. In Australia, that's not necessarily the case. And I think that's because people need to get used to the idea that you can, for example, use your phone to scan a QR code and make a payment. And that can work in the same way that Australians have got very used to using their phones to make payments on Apple Pay or Google Pay, or tapping their cards, or indeed using online banking. And you know, mobile banking in Australia is probably more sophisticated than it is in most Western nations. Partly that's a tyranny of distance, because a lot of people live a long way from bank branches. But I think it's also, you know, the fact that we've got 4 very strong banking players who've gone quite early into creating these apps, and we've got used to it. So the recurring theme here is repetition. And I think the more that CDR products become available and people get used to the sorts of interfaces that they are using to hand over their data, the sorts of benefits they get when they you know, use that data to make better purchasing decisions, or in the multitude of other use cases that are available. And the more familiar they get, not only with the graphical interfaces, but also with the types of consent terms that they would be agreeing to, then the you know, happier they'd be to use those systems. And in addition to that, the Australian Treasury will be doing a lot of work over the coming couple of years around helping educate consumers on a more hands-on basis. But I think the real clincher will be when we have these products in market, delivering tangible benefits to Australian consumers in a way the CDR will be so good that people won't want to do business any other way.
Could I add something there, Andrew?
Please.
So I want to put a slightly opposite point of view, only from the perspective of one, we had, it took us under 2 months to have 1 million hits on CDR. Now, we're a smaller country, the United Kingdom, and I realise in 2 months, United Kingdom had 1.9 million. But just on the basis of what Harry said, we haven't advertised it yet. Like, hardly anyone knows it's there, but we've still got 1 million hits within the first 2 months on Frollo. And within 24 hours, the first customer moved from a bank to the accredited entity that is Regional Australia Bank. So there is, like, don't think, and I work with some other countries, and actually in some other countries, people are more conservative. So don't, in thinking about bringing a business here, don't think that Australians won't go for a good deal. They totally,
I love a good
deal.
Will.
And the issue, the policy issue, which I've had both in this inquiry and my previous one, I'll give you an analogy here, is Australians sharing data just swimming in dangerous surf, right? They swim at the beach. Now, up until about now, half of them have even know they're at the beach, right? But they're happily sharing data merrily. Now, all we, in my view, what we're trying to do with these new protections is just present a pair of red and yellow flags, which if you've ever come to Australia, you know that's where you're supposed to swim, and make sure that the flags are far enough apart that there's lots of room to swim. Now, what I didn't realize is, just like at the Australian beach, people do run for the red and yellow flags. And so it's just a question about getting that data sharing behavior, which when we share it all the time. And in leading these inquiries, I find it really quite astonishing that people say, well, you know, we shouldn't let people do this. It could harm them. And my response is, we need to protect these people now by showing them a safer place to do this thing. And really, what I'd be looking for businesses to do is to help move people into the flags. And what you have as a benefit from that is those people, those Australian citizens, will stay with you because you've helped them to share safely. And through that first couple of months of the CDR, I was very impressed at how many Australians were using it, even though we haven't even started the process that Harry referred to.
That's absolutely right. And I think it's also keeping in mind Australians are quite an agile people in terms of changing their consumer behavior on things like that. I mean, look at the fact that we've got pretty much 100% banked population, of which pretty much 100% have online banking enabled. The number who don't would be in the thousands, if that. So yeah, there are some issues with things like passbook accounts, which any bank would probably think they were going to run into. But the scale of that has turned out to be so low, particularly with COVID, where a lot of people who might not have been banking electronically, as a matter of course, have started doing it. As Jane mentioned in her, as the minister mentioned in her intro the other day, her mother is the kind of person who still thanks the ATM when she takes money out, and yet she's doing all her banking electronically too. So there's a lot of opportunity, and by that I mean, we've got perhaps a less data-friendly ecosystem in terms of products that are already in market, but B, we've got a consumer base that's very willing to take them up where there is a good deal available.
I love the analogy, Scott, but go Michael.
I was just going to jump in. I'm probably a little bit more cautious on the education side of things with consumers. We run an education campaign for credit reporting, trying to introduce consumers to changes which have come in the last couple of years. I mean, our experience has been that there is little engagement from consumers. We're trying to get to the consumer before they have a problem, to educate them how they can ensure that their credit report is maintained and is healthy. We find that it's a real challenge to get to people unless they're engaged in the system, they're not interested. And unfortunately, with credit reporting, engaged means something's gone wrong and they're trying to fix it. So
that's what gets you engaged.
Yeah. So I think with open banking, it's going to be a very difficult thing to educate consumers about open banking. What they do need to is experience it first, and the education will come through the experience, which just makes it so important that that first interaction is seamless. Whether they understand, they accept what's happening and things don't go wrong. So that will be the real test, to see that first interaction. And I will just say that in terms of the interest being shown in open banking in the last couple of months, I think COVID might have something to do with that. I mean, we have seen a huge jump in the interest in credit reporting because, again, it's been across the whole market that suddenly for hundreds of thousands of customers, millions, they're actually now having to take an interest in what their financial health looks like. So I think that may have swept up both the credit reporting and open banking interest of consumers.
Yeah,
probably not justifying COVID, but it might be one little good thing coming out of the COVID pandemic.
Yeah. I also think, just look at the fintechs that have had the most success in Australia, right? They've all been B2Cs. They've all been things that involve consumers doing things in very different ways to how they've done them before. Airwallex, Zip, Athena Home Loans, Afterpay, which is now challenging the FANGs in terms of its market cap and its growth potential. These are very everyday kind of apps that people have started to use, have had a good experience using them, and are using them again and again. So I absolutely think that there's great potential there. We've also currently got a curriculum review underway around financial literacy, and we're looking very hard at how we can help people become more financially literate at a school, primary, high school, university level, and also the environment around teachers and parents becoming more comfortable with new and innovative financial products at the same time. So I'm very optimistic about our path forward here.
Okay. Now I've got some interesting questions from the audience that I want to start introducing into the conversation. And here's one that I'm not sure where to direct this, possibly Scott, but it could be you, Harry. There is an emerging sector in Europe and the UK driven largely by GDPR, open banking, PSD2, which provides individuals with the means to access, manage, consent and share their personal data. Where is Australia in terms of this market that has featured in the European data strategy and already being adopted by cities, banks and telcos? I know we addressed some of that, but Scott?
That's what we need to do to facilitate the consent management and services and the intermediaries that provide that is squarely in my inquiry. So there's nothing stopping that happen now, but indeed, and this is public because it was in my issues paper, the standardization of a consent taxonomy so that we can actually start to attach consents to data. That is in my inquiry, and I've received about 80 submissions to my inquiry already, and you can see what people have said there on the website. But the consent management process, if you, I've got a prop, Andrew, you're going to love this. Right, so here's the original review. Like, these 4 words are all about the CDR, right? Okay, that one, convenience, that's going to be just totally crazy unless we have consent management of some way, because if it goes to the whole economy, and the thing about Australia is I can give consent to my energy company to receive my banking data, my bank to get my telecommunications data. A real person's going to really struggle with all of that complexity. So we certainly need consent management as a framework. Now, keeping in line with the policy we already have in the Australian government, that's not the kind of thing that you would expect the government would provide. The way the CDR works, it provides the rules in order for people to compete, to provide a safe service that does that. So reading between the lines there, depending on what the ministers that Harry works with decide about the report from my inquiry, the person who asked that question could get an answer pretty soon as to what Australia might want to do to facilitate that market.
Excellent, excellent. Another question, and this is a long one, so stick with me here. For full disclosure on the above, we're an Australian company operating in this emerging market. Our technology is used by banks, governments and enterprise here in Europe and the UK. It provides a dual role of data rights protections for consumers and compliance and audit for organisations. More importantly, it provides significant transparency for the citizen data subject. This is an all API driven and enables read, write, update, revocation. It's a missing piece in the open data economy and enables individuals to bring data from multiple sources and then share it with organisations they trust via their bank or trusted service provider. Do you see this right evolving and being applicable to Australians? We are offering APIs for banks and fintechs here in Europe. Is Australia a market for this technology? So they're asking you to justify their business case in Australia. Who'd like to take that one?
I think that's quite germane to everything that's in Scott's inquiry, really. So do you want to take it?
I thought you were going to say that, mate. So again, as Harry said, part of the terms of reference to my inquiry say, well, how does this CDR thing help actually connect parts of the digital economy or the data economy? And the service that was just described is an example of something which may in fact do that. It comes back to that convenience word. Certainly the principle that was just described is pretty much the key principle of CDR, which is I have access to something, I should be entitled to share it with whom I choose. The thing that we have in Australia, which is something that you would need to work with, in that is it's not every single thing, because we didn't want the Australian consumer data right to be portability without a pathway. So we need to have a means for Australians to actually do this. So it's not Article 20 of GDPR. It's not you've got a right to transfer everything. We've got to have the pipe so it's seamless for you. So, but of course, the way that the consultation process works as each sector is added is what you have going through the pipes is really the stuff that's most important for the consumers as to what will make their life different. So if you go ahead a few years when many more sectors are added, you have effectively an environment where such a service would easily have a role to play. And of course, people on this phone call will understand data quite well, as actually, we have right access being added. Well, that's part of my inquiry as well. And that's right access across the economy, not just payment initiation, because it's part of the CDR. And so as you add that and you think about what that requires, of course, inside an economy-wide data right, which is supervised between the red and yellow flags, where you are constantly being able to change your data or ask for new services. The other thing that comes along with that is, whether it's designed this way or not, is all of a sudden Australians are identifying themselves digitally as well, which of course is a fundamental building block of any serious data or digital economy. So that plays into its emergence as well, which was implied in that introduction.
Yeah, I'd absolutely agree with that. And I think, you know, on the issue of the viability of firms that do things like auditing data, you know, origin, transparency, etc., those will be issues that will only accelerate in their relevance to Australians as the CDR progresses in its rollout. But, you know, as Scott said, I think there's a great willingness among Australians to share their data in those ways between institutions, between industry verticals, where they see a benefit coming to them. I mean, I think as partial proof of that, Australians are probably some of the most voracious users of frequent flyer points in the world, which is something that Scott and I have discussed many a time. And, you know, give someone a 10,000 frequent flyer points for signing up to something, chances are it'll accelerate adoption of that thing. And you know, I think formalizing that kind of cross-industry data applicability is one of the great priorities and will be one of the great victories of the CDR when it rolls out fully.
Excellent. A question, how far off is CDR in Australia from more sophisticated users beyond product swaps? Example, use for lending assessments and the like.
Well, the ACCC is currently in the process of assessing a very large, surprisingly large number of firms, close to 100 on last count, within just a couple of months of the CDR coming online. But I can tell you those companies applying to be accredited are going to use data in all sorts of ways, including quite possibly what you just mentioned around credit assessments. I'm sure Michael will be able to give you more information about that. But it's certainly been designed as an application agnostic rails on which firms can build any sort of innovative use case that they see fit, and the ACCC, as the governing body, can assess and approve on a case-by-case basis.
Michael?
I mean, our interest is particularly in the use of the data for credit assessment purposes. So, I mean, probably best at the moment to say I would suggest it's a slow burn. There's one of the accredited data recipients is currently using it for credit assessment purposes, which is really interesting to hear. Although what I'd suggest is it's probably being used in a more basic version of verification of income and expenses through transaction data, rather than the more complex, use for credit scoring and modelling. It's one area that I do see some problems just in the rules framework that may limit its use for that service, that purpose, just because of the protections about the use of the data may not be conducive to using it for those purposes. But something that Scott talked about before about the consent taxonomy, we've recommended that there be consideration be put to certain uses such as credit assessment that would be subject to its own set of sub rules that are sort of closely attuned to how it's used. So we're hopeful. I mean, that sort of has been recognised as a potential idea by a number of the stakeholders. So we're hoping that works its way through. Something that I call out for Scott's original report as well was that the explicit recommendation that alternate data exchange methods were not prohibited, unlike the UK, which I think prohibited some of them. I mean, I think that was actually a very good suggestion, good recommendation. The messages we're getting back is that, at least in the near future, that there's possibly a lot of interest still in the screen scraping technologies, more politely, digital data capture. So I think there's you may even see in the short term more adoption of the screen scraping before the open banking, but I wouldn't be surprised if that then gets people used to accessing the data, and then they very quickly flip to the better system of open banking as it settles down. So yeah, for credit assessment in particular, what I'd say is slow burn, but I suspect before you know it, it's going to be pretty common.
Yeah, I would also just add to that and say, we value technology agnosticity. This has been built to be a competitor to screen scraping, and a bloody good one at that. And what is likely to happen is people will start using the CDR and realize it can be lower cost, it can be more accurate, it can be real time, and it will become the dominant form of data transfer in the market. But unlike the EU, we are not currently moving to ban screen scraping. We are taking an open regulatory view on this, and on the issue of rules and how particular applications may be limited by the rules as they currently are. I would just encourage you to think of the CDR as a startup in itself. This is agile policymaking, agile regulation writing, in an agility that is commensurate to the agility of the businesses that are looking to use it. And nothing is set in stone at this point as far as the rules go. So there were very interesting credit assessment providers that took part in the testing process and the collaborative process in writing the rules that are currently in place. And those rules will inevitably change if right access, for instance, as will be contemplated by Scott's report, were to be introduced in the future. This has only been running for a couple of months. So, our ears are open, our doors are open, as are the ACCC's. And for those firms that might run into difficulty with regard to restrictions that are present in the rules, we're happy to work with them and are working with them presently.
I'll just echo
Scott?
that. Sorry, sorry, Scott.
No, sorry, I was just going to come back to the comments that both of you made and bring back to the analogy that Andrew liked. It's actually really hard to tell Australians what to do. And I've only just finished being my career of being a volunteer lifesaver. It's really hard to stop Australians just going in swimming anywhere. So the idea is this set of red and yellow flags is so good that you just don't want to swim anywhere else. But it just doesn't quite work in this country just to tell people what they can do at the beach. I've tried for too many years, and you've just got to show them that actually the surf's better over here where we're watching. And what Harry says, the analogy to push it too far is, we're going to have to move those flags, right? And, we do that in the beach all the time because the surf changes. So those things are not stuck forever. As the market develops, we're going to have to move them. And quite frankly, as we add more sectors, move them further apart so there's even bigger place to swim. It's just that we're all watching, so it's a safer place to swim.
Makes a lot of sense to me. We do like the positives and stay away from the negatives if we can. I don't know. I think Australians have become easier to manage in some regards. I think we've complied pretty well in this COVID environment so far. I'm wishing all the best for those that are listening from Melbourne, because I know it's not easy, but I don't know, I think we've done pretty well in some regards with that one. Before we wrap it up, Scott, any other key messages for our fintechs that came out of the financial inquiry, the Hayne Royal Commission? To me, that was largely a confirmation that the laws that we've got are pretty good, but it's about the application of those laws to consumer rights. Is there any key messages, one or two messages that you'd like to send our fintechs when thinking about coming to Australia?
I think you hit it perfectly there, Andrew. One of the clearest messages from, and you know, Hayne was a High Court judge, was, you know, we've got laws. You don't need lots more laws. If you have a law saying, for example, don't be dishonest, that's pretty much all you need in many circumstances. And so the idea is, you know, compliance with our laws is not a risk-based exercise. You kind of got to, okay? Because they're the rules of the road. As much as I said that Australians might have a problem with dealing with authority, they don't have a problem with complying with rules that they understand. So, you know, if you're not complying with the rules, that's not fair, because I'm complying with the rules, and that's not the way our society works. So I think that echo of, you know, the rules are there for a reason. They're not just guidelines, to quote Pirates of the Caribbean. They're actually like rules. But after that, you come to the perspective of, well, and you've seen this over the last few months with COVID, is the financial services sector has actually performed quite well in helping people, along with a lot of other sectors as well. So I wouldn't, if I were a fintech, look at the Royal Commission and say, oh, this is worrisome. I wouldn't do that at all. I think it's the end result is a sort of a refresh as to actually a lot of things which we thought shouldn't be done still shouldn't be done. But keep in mind, when you come here, you kind of better look at the rules. But once you know what the rules are, there's not a whole lot of secret rules that you need to worry about. It's all up front in Australia, like it is in a number of other countries, but there's no sort of unwritten rules which are really hard to find if you're not from this place. They're all there for you to see.
Yeah, and I think transparency was actually one of the key themes that kept coming up through the 12 months of the inquiry, and I think pretty much every day that was the number one thing. Harry, any recommendations for our fintechs just to keep an eye on over the next 12 months as they launch themselves into this market?
Absolutely. Just following on from what Scott said, you know, the one thing that I hate, and you know, we hate in government more than anything else, is regulatory uncertainty. And part of the reason why we're standardizing data, because it means that there are clear rules that companies can play by, and that regulatory risk shouldn't come into the equation. I think on a broader sense as to, you know, advice for fintechs coming into the country, well, you know, you're coming in at a really ripe time where significant steps forward in regulatory environments, in, you know, things like the CDR, have coincided with significant steps forward in trade negotiations. We're at a point in Australia where 70% of our trade is currently going through countries with which we have a free trade agreement, and that has gone up 6 or 7 times since, you know, we came into government back in 2013. So, you know, this is a government that is very welcoming of free trade, particularly the services industries that have served Australia so well economically. And, you know, I dare say, as the mining boom dies down, Australia's done very well off digging things out of the ground, but we are going to need to look at where we're going to replace that share of the economy. And the thing that this government has identified more than anything else is technology, the innovation economy, and especially fintech. And the fact that fintech has been carved out as its own portfolio for the first time anywhere in the world, as far as we're aware, has been given a minister, speaks volumes as to our Prime Minister's commitment, as does his initiative in creating the CDR. So my message is welcome, and you know, there's never been a better time to enter Australia as a fintech company, and my door's always open, certainly, for anyone who wants to get in touch and have a chat about the regulatory environment here.
Very positive message there, Harry. Thank you. Michael, for those that aren't aware, ARCA is the Australian Retail Credit Association. It's the association that handles so much of the credit policy that financial institutions have to deal with when dealing with customers. It really is a hotbed of highly technical and well-credentialed people discussing industry issues back to governments and policy and so on. One of the key themes that's come out of this event over the last 7 days is that although it's a relatively small economy, it's very well connected, and networks are really important. Relationships are really important if you want to build a business here in Australia. So my recommendation to those that are listening, if you are interested and involved in retail credit, you really have to be a member of ARCA. What are the key things that are facing ARCA over the next 12 months? I know we're about to have the annual conference in November, but what are the key things confronting the Retail Credit Association and its members?
Look, I mean, the credit industry is still facing the implications of the COVID pandemic. It's been a shock, obviously around the world. It has had direct implications to the credit reporting system itself. But broader than that, we're still dealing with responsible lending. It's an issue that hasn't gone away, and we've had some recent court decisions which will significantly change it. Otherwise, I mean, I think just the access to the open banking data will be a huge issue over the next 12 months. I was just actually going to say something about what Scott and both Harry said before about the welcome given to the fintechs. The recent, our ASIC, our financial service regulator, recently made some statements which were basically a very big challenge to the incumbents in the market, saying, well, why are you saying this is so hard when we've been demonstrated by the fintechs and regtech industry that there are simple and straightforward ways to approach things. So I think that does show just the welcome mat that's being placed out there, both at the government level and also the regulator level.
Yeah, I think that's a very interesting message. So look, unless there's any further questions from the audience, I think what we might do is wrap it up. Have we got any more questions from the audience there? No, I think that's it. So look, a really good session. As I say to the audience, you've just heard from some of the three most important people in Australia that are helping formulate and cover policy in this most important area. And for those that are in data and technology in coming into Australia, this is a great time because the environment right now is about to go through some of the most important changes. And the theme is it's opening up for innovators like it's never opened up before. And I think there's going to be more clarity, but also more education and therefore more engagement from consumers and financial institutions in this great space. And we're going to see some great new innovations as a result of that. So Harry, thank you very much on behalf of the industry for your good work, and keep it up. We're excited about what you're doing, and also keen to see what the budget brings us. I know that's your next big step now. I'm sure you've got dozens of documents on the desk right now. Can't give us any tips, can you? No, that's all right. Scott, thank you for your hard work with the Treasurer and your ongoing work with government and your access tonight. It's been fantastic. It really has been fantastic. And also, Michael, I look forward to what's going on with ARCA. I look forward to the discussions that we've got and some, really great insights as to what's going on there. You've got a hell of a workload, I know that. So thank you all panel members for your time and insights tonight. And can we share all the details with the speakers? I suspect, Harry, probably not your details, although... Oh, no,
please do. Please, I'd read my mobile number out now if you want me to.
I don't think that's necessary.
More than anything, so please get in touch.
Scott, Scott's with King & Wood Mallisons. King & Wood Mallisons are literally the leading law firm, particularly in this space, but financial services has been for many years. And Scott's always available. His accessibility is fantastic. And Michael Blythe is with ARCA, the Australian Retail Credit Association. Very easy to find, but if you need some more details, just shoot us a request at Newfound. They're very easy to find, and they'd love you to be a member as well. So thank you all, panel members, and I look forward to seeing you all very soon. Thank you again.
Thank you.
Thank you.
Thank you.
So with that, we're going to take about a 20-minute break. We've got our next session, which is starting at 6:30 Australian time, is with Murray Herbst, who's the Director of entrepreneurship at UTS, and he's got another brilliant panel with Chris Bailey, co-founder of Cover Genius. You heard them mentioned as a great success last night. They've got a great story. Damir Circa, CEO, founder of Basic, and also Linda Coker, who's the commercial director of Vault Bank, which is a neobank. And I'm sure they're going to share some great stories about how they've launched in Australia, their successes. They can tell you what, there's some scar tissue there, which we're going to unpack as well. There's great lessons to be learned. So let's look forward to seeing you at 6:30 our time, which is in 20 minutes of your time. And keep those questions coming. Look forward to seeing you soon. Thank you very much.